just very quickly, I know I said I was going to do like the 15th onwards, but I wanted to do some candle replay, just candle by candle. And I realized that like that from like, so the 15th is like here to here. And I realized that it was actually like a bit too nice. And I wanted to, with this, I wanted to do some more difficult days, maybe where, it gets a little bit frustrating, days where, I can understand possible L's, or maybe showing you days where, the TP was valid, but it just doesn't quite get hit. 1 second. And because of that, I chose not to do this, but I still want to go through the higher time frame and understand, and show you like how the higher time frame was clean. And then we're going to jump into the 26th. I think we're going to do 26th to 2nd. I think we'll see. We'll see how far we go. But again, let's just give a brief recap on the higher time frame. So we obviously had, actually just give me a second, let me go into full screen here. Okay, so obviously we had our inducement high. We have liquidity here, liquidity here, and let me take off auto, and liquidity down here, right? Like that. We obviously covered this bit here. We get our lovely false reaction up into this M15 inducement zone right here. This was all very clean. We covered this on the previous week. Very nice. And then obviously we had our false reaction from this liquidity here that came down and mitigated our H1 zone. So now we were trading away from this, but we know that overall we should be trading away from this completed lit cycle here on the higher time frame. So we're trading away from that. Ooh, we're trading away from that. Lovely. And then we don't just want to randomly pick one of the two POIs. How do we want to go about it? Well, first we want to see them build liquidity, give a false reaction from that liquidity, and then maybe we can get our vector inducement higher, and maybe it comes into a POI. We got a lit cycle, we're trading away from that, right? Similar to up here. So if we just go down into the M15, obviously I've been through this a lot. We have our liquidity, our false reaction, and then our vector up. So this vector up also comes into this and fills our zone. Perfect. And this is the thing, you can have both of these zones marked up, but you don't just want to randomly pick one of them, like, oh yeah, it's this one here, or oh yeah, it's this one here. What you want to do is you want to wait and let them show you what they're going to do. Build the perfect equal highs. Give a false reaction from there. Vector down, come down, mitigate this inducement, trade up into the inducement and our 4-hour zone right here. Yeah. And then from there, we can look at this. Okay, perfect. And then, we're trading away. Lovely. And now we get to the day that we are currently on. So let's just go through these days as well. After this inducement high, what can we expect? London knockout or retail heaven. We get a retail heaven down to the next liquidity point, and then we get a pullback. And then here, this is one of the things that I want to talk about. During this, any buys that you take are going against this most recent inducement, so you have to be quite like conservative with your TPs. And you've also got to recognize that intraday we have an inducement here where we also gave false reaction from this liquidity. So maybe this is going to turn into a ranging day. And personally for me, I TP based on like the most likely scenario, not the scenario that I want. So here it's quite likely that we turn into a rangy day. So with our sells from like here, which are very valid, build up, inducement high, sell back down, you know, you can target this. But now any buys and sells, rather than targeting like the extremes for like being induced, you're much better to target like mitigation. So for example, this buy here, you can see it on like, even on M5, it's quite nice. I just target this, and then this sell back down, I just target this. And it's just about being like realistic. And then look, obviously we build liquidity for the next day, induce it. I'm not sure if this takes out the high again. I don't think it does. And then obviously we get our drop. Would have been much more ideal if the high did get taken out and then this, or like this got induced in London. Then you've got your London open knockout, which is like obviously ideal scenario. Let's jump into the current day. So starting as always, same thing. Excuse me. Same thing. So let us go. Sorry, just excuse me. Let me have a drink. All right. Coming into this day, what do we see? Well, we see a couple of things, right? First off, where should we always be starting? We should always be starting with marking our liquidity. Potentially, this could be an inducement. Potentially, could be equal highs that we expect to get taken, right? And then coming into this, we obviously also have Asia low. Potentially see this as like, okay, maybe we trade away from this for a little bit, but we have to remember, overall, we're looking to target much lower. This is our inducement that we're trading away from. So potentially, where could we be coming? Well, overall, we're probably going to come down to like this, at least this, right? At least come and take this out, because this is our like very, very significant inducement with like the daily highs taken. I don't like the fact that auto's on. With the daily highs taken right here, like that. So we should definitely probably come down and take this out, but at least here. So we know like we're going to be quite bearish till at least here, most likely till all the way down to here. So now that we know that, what do we know about our potential TPs? Well, if we get like an inducement high, a nice inducement high, then we can probably aim a lot lower. But if we get a inducement low, it's most likely just going to provide us with a pullback and not a full-on reversal. So we have to be a little bit careful with our inducement lows. We don't want to be aiming for like, you know, ridiculous TPs. In this case, maybe if we get an inducement low, we can aim for this liquidity up here. But if this was not clear liquidity, then you'd more likely be aiming for like a mitigation or something like this, something a bit more safe, a bit more secure. So as always, so I'll just do this to show the next timing. Actually, let me do UTC +2 for you guys. So there we go. Okay, so that's our next timing, Frankfurt. Now, I want to say that with my personal style of trading, I like to catch, rather than lots of trades on one pair, I like to catch clean trades across multiple pairs. So maybe I'm not going to be as aggressive on this single pair, but when you're trading like 7 pairs and you've got your alerts on, you understand, okay, I'm not interested in it until it takes out this price action, you begin to it's basically the same as trading like 1 or 2 pairs, but just focusing on them. You get the same amount of setups, but you also get like much cleaner setups. And maybe some of you don't I know quite a few of you are interested in like the intraday ping pong, but I also think there's quite a few of you who are content with just, focusing on like true Mona Lisa setups or like really clean setups and just taking them. And this doesn't necessarily mean that you're going to be taking less trades in a day. It just means that if you're looking at more pairs, you've got more options. For example, if a day is specifically quite shit, then you can just go, okay, I'm not going to look at it. Like, if it's just going into a build up the entire day, like let's say price was just building between here and here, alert here, I go look at other pairs, I go do something else. So let's jump in. So obviously we're going to go on to M5 and then I'll stop it when I think there's anything interesting. We'll discuss it and we'll go from there. All right, let's bring this down a little bit. All right. Okay, so nothing interesting yet. Okay, so now we've actually got something a little bit interesting. Let's move this to London so we know when London is. So now what do we have? And this is a scenario that happens quite a lot. And I think people need to learn to like sit on their hands a little bit during this scenario. We have obvious liquidity low, obvious liquidity high. So what should we be doing here in an ideal scenario? Just give me a second. Okay, in an ideal scenario, sorry, not in an ideal scenario, but what we should be doing is we have liquidity high, we have liquidity low. So we should wait. Very simple. We should wait. We're in just one big build up at the moment. Okay, let's keep going. Now, obviously, M5 is our home time frame. It's the time frame that we're most interested in. And you've got to be quite careful because you will get caught out a lot, especially at the beginning, if you're just sitting there stuck on M1, not really looking at the bigger picture. Because look, this is how it looks on M1. So on M1, maybe you see like, oh yeah, this is my inducement, I jump in, and then you see, oh yeah, that's my inducement, I'll jump in that, oh yeah, no. And then you go, oh, okay, no, that's the inducement. Whereas if you just go onto the M5 and you just zoom out a little bit, you see like, okay, like we've got liquidity here, we've got liquidity on like either side, it's probably not best for me to trade within this at the moment, especially if I'm looking to play those Mona Lisas. So ideal setup here. Let's discuss what we would get. So we know that we're coming into London Open. So the next one is MM1. So ideal setup, we get something like this, right? Show the liquidity, maybe give like reaction, maybe with like strong vectors down, because the trend has shifted downwards on like M15. So people are looking for sells. So if we can get them in prematurely and then induce high and then trick people into taking the buys, then the sell setup would be very nice. But obviously that is like ideal scenario. And it's good to consider these. You're not predicting what's going to happen. You're just considering like, okay, what is the ideal scenario for me to take this trade? And then if that ideal scenario presents, you definitely take trade because it's what you've been waiting for, right? But you can also have multiple scenarios where you're like, okay, in this circumstance, it's fine to take the trade. In this circumstance, it's not fine to take the trade. And it's about understanding what validates and invalidates your trade so that when it comes back, you already know, like, okay, if I see this, I'm taking it. If I don't see this, I'm not taking it, right? So we're coming up, huge vector up, perfect, actually perfect. Now, you should not be scared of stuff like this at all. You should not be scared of stuff like this. You should not try and trade in here. No, this is ideal. If you can identify these false reactions, literally ideal. Okay, so let's continue. We're giving our false reactions. Vector candles, very nice. Very nice. Ideally, we mitigate this point to the left. This is our ideal scenario. Okay, so we filled most of the imbalance. We didn't mitigate the POI. Not the end of the world. Now, let's look here. So let's dive down. We've had our BOS. We've had our BOS. We had our false reaction too. Again, very important, the false reaction, because what it does is it shows you where people have been tricked into entering, basically. They've been tricked here because, you know, they've shown the liquidity. If you look on M5, it's a bit more obvious on M5. This was just a huge reaction. You know, so many people are tricked. Oh, candle close, they're entering here, stops above here or up here. And now they've been induced. And now they're like, oh, I was wrong. Right? They're like, oh, I was wrong. In actuality, oh, we've got this double bottom, you know, we're trading away from it. Huge momentum to the upside. Of course I was wrong, right? So let's continue to play. Let's mark out the zone that we're interested in, which is, of course, so yeah, this is where it comes down to how you want to refine. If you want to refine to the imbalance, that is absolutely fine, like that, or even like this. But personally, I always like to take the last buy before the sell down. So the selling pressure started here. So for me, I'm taking this. Now, obviously, this is quite big, but what we need to consider is where are we targeting? Because that's a big zone, obviously. But look, we're trading away from this inducement up here. We've had an inducement high to go along with it. Huge vector candles. So where are we most likely targeting? Well, we could target here, but look, we have an even better target of these equal lows. Yeah. So yes, the zone seems big, but when you factor in the target, that's where you're going to target. Now, you could say, oh, but why not here? And if, okay, we'll get into this a little bit later, but let's say we took a trade like price comes down, tags us in, and then does that. If I was in this trade here, then the target for this one would just be this, because this is enough liquidity to cause a pullback. And if it pulls back, where is it likely going to take out? Right here. So it could do that. Boom. So it depends about where you get in and the circumstances at which you get in. Because, like I said, higher time frame inducement up there. Clean inducement in London Open. So we could definitely expect some type of London knockout, right? So for this, it makes sense to target much lower. And that's what we did. We went and we looked. Where's the little... How do I get off? Okay, they're perfect. We went and we looked. Okay, this point here. And then we saw, oh, there are equal lows here. So this is probably the better target overall. Again, if you target this, I don't think that's the end of the world either. Okay. Excuse me. So that's the target. Now we have our, let me delete this. So ideally, if we come down into like something like this, is this a mitigation that we want to take? Probably not. It's probably not a mitigation that we want to take. It's probably going to be an SMT. And why is it fair to assume that it would be an SMT? Well, it's because of the equal lows right here. You know, this is Asia low. It's also equal lows. We're not going to be expecting like We're not going to be expecting new highs from here. We expect this to be liquidity. And what is the ideal scenario with liquidity? Well, we got it over here, where you have you show the liquidity, you show the false reaction, and then you induce it. That's the ideal scenario. Now, potentially after we take this out, we could see a pullback, but when it's not going to be a pullback, it's not going to be a full-on reversal to take the highs. Yeah, because why would it be? When we understand, right, if it is a reversal that takes the highs, in this scenario, it would not make sense to expect that. It would make more sense to just expect a pullback. So you have to, in my opinion, when you're TPing, you shouldn't TP based on what you want. You should TP based on what makes the most sense. And in this case, London knockout, inducement high, after a significant inducement high, targeting the equal lows. That should make sense. Okay, so now we're not going to sit and watch all of this on M1 because we don't care about it. Like there's no point just sitting there watching on M1 because you get analysis paralysis and you end up taking trades that you shouldn't have. Okay, so let's see what happened on M1. Now this is not a trade that we should take, but we can understand. Build up, inducement, mitigation. Potentially at this point we can expect what? A pullback. Does that mean we have to trade it? Absolutely not. Okay, so we're getting our pullback. Timing's looking good. Wow. Okay. There we go. Tagged in at MM1 to the, I don't know, not quite to the minute, to the 5 minutes afterwards. Okay, we're doing our thing, we're holding. Okay. All right, perfect. Makes sense. Now, you see why I like to ensure that I'm tagged in rather than get the best RR, because no matter how you refine it, this would miss. And this is personally one of the reasons why I always like to take like the final buy before the sell or the final sell before the buy. So like that as well. I wouldn't take this trade obviously, but that'll be how I refined. Okay, so at what point can we go break even? Well, personally, it's fine to, like, in my opinion, go break even here, because realistically, maybe not, because there is still a chance that it comes back up to here, right? So once these lows get taken, that would be the point where I would be like, okay, it's right to go break even here. It's almost definitely like the best decision. So this would probably be the break even point for this specific trade. Right, okay, let's go on to M5 again and let's watch it do its thing. Now, are we just going to apply a random M5 let? No, it needs to make sense with the price action, right? Here's our low that we're expecting to be taken. Lots of liquidity, trading against the most recent high, trading away from the most recent high time frame inducement. Should make sense. Perfect. Okay, notice how we just come back up. This is like your M5 order flow. Filled there, filled there, filled there. Perfect. Trading down. Okay. So now we're holding this trade from the top. We're holding this trade from the top, and we're going to look for potential re-entries towards our overall target. We expect the pullback. We shouldn't really be too shocked about it. Where could we potentially trade? Maybe if it comes back up into, so this is obviously too big, because for your target, that's going to be like a 1 to whatever. So in cases where In cases where, you know, this is too big, I just take like 50% of the zone. But why do we even consider this POI in the first place? Well, this POI rests on the midline, and it's a good POI to take for continuations lower. But if you don't want to take this because you expect more of a pullback from this inducement low, completely understandable. Okay, price does its thing. Okay, back onto M5. So again, we are still looking to take a potential continuation, but there's a couple things that I would want. Personally, I'm not just going to take random mitigations. So the ideal mitigation would be an Asia low bounce, or we have a build up, induce high, continue lower, and then we've got an inducement POI that we could take. Either one of those is quite nice. Okay, so what are we going into right here? A build up. Makes sense? Okay, we're respecting it. And this is why it's important that you stick on to M5, because if you're sitting there watching M1, oh yeah, this is the inducement, I need to take this trade, I need to take this trade. But on M5, it's nothing. And especially when you know that this inducement here is in line with everything. It's literally perfect. You know that we should come down and grab at least some liquidity to the downside. At least some. Potentially, if you get really lost and you see this, I could maybe understand if you took it. But you have to take into account everything. Like why would this little inducement here, okay, here is the scenario in which this would be fine. We create liquidity. Now it's equal lows. We come up, come back down, false reaction away, come back down, then you can take that. In this scenario, you can take it. And where'd you take it to? Probably just Asia high, Asia low, sorry. Something like that. But you need to be considering what scenarios validates what. Right, so we're in our little build up, perfect. Nice and simple. Okay, so potentially, if you were absolutely starved for a trade and you really wanted to take something, you could potentially look to take this. Maybe. I mean, in my opinion, this is like, I don't know, this is like forcing a trade a little bit. But if you really wanted to, you could take this and you would break even at this point here. It would have to be a quick break even. But again, like, that's not really something that I'd personally look to take. 1 second. Okay. Okay. There we go. TP hit. So at this point here, what can we expect? Maybe we can look for a potential pullback to maybe take some liquidity higher. So let's have a look. Let's see what presents. Okay. So again, what did I say that we need to look for? If we're going to, if you're looking for a Mona Lisa reversal, you want liquidity, price trades away, gives a false reaction, induces it, and then goes. Maybe comes back and mitigates and then goes. That's like, if you're wanting to trade like a Mona Lisa reversal or pullback in this situation, that's what you want to look for. Again, this is my personal style of trading. Obviously, if you're going to be looking for trades like this, it does mean that you're going to be missing out on some trades. But that's why you have multiple pairs to look at the really, really nice ones. Okay, so let's keep going. Let's see if we show any liquidity. No, we just keep dropping. And you see how by waiting for them to show liquidity, react away, give the false reaction, you prevent getting into all of these little ones here. Like, oh yeah, I take this. And then you get 2 bullish candles, L. Oh, and then you're like, oh no, sorry. This was the liquidity. So obviously I take this. And then it's like, oh no, I got a couple bullish candles and then it was an L. And I'm sure that has happened. And you know, that will continue to happen until you develop your patience. You can't control what the market does, you can only control when you push the button. Okay, so now we're at London close, lowest point of the day. So we get like a potential pullback, realistically nothing to trade off of. And there we end the day. Okay, so let's look at the higher time frame. Let's go to the next day as well. So we need to go to 3. There you go. Okay, so equal lows built right here. You might be like, oh yeah, but isn't that an inducement? Yes, technically, but look, we're coming lower. Why would we stay within this zone? These are, you know, equal lows. This is liquidity. We've got lower targets. But if you're really unsure, what can you do? Let me just grab this. Sorry about that. Really unsure, what can you do? You can have intraday conservative targets. Nothing wrong with that. Absolutely nothing wrong with that. Okay. So let's do exactly the same. We know we have liquidity lower. We know that we have potentially this could be an inducement, or potentially could be liquidity. Given that we have multiple reactions here, I'm expecting that it will be liquidity. So ideally, let's think about it. What are our ideal scenarios? Well, we could do something, you know, give like a false reaction, maybe leave liquidity here, come up, induce, mitigate, induce, take the pullback, something like that, right? Or we could come down, induce low, give the false reaction. Oh no, Asia high holds. Psych. Go like that, boom. Something like that. You know, it's good to, we are predicting, but we're not gonna like force that analysis. It's good to just understand, like, okay, given what we have, what could we expect? So again, very similar situation. We have liquidity on either side. So what are we going to do? We're just going to sit and wait. Again, I'll mark up the next timing. Are we interested in that, given that we've got liquidity lower? Not really. So we'll go to 9. Again, we're just marking our liquidity and just waiting. Like, when you have liquidity on either side, it is just best to wait. Okay, so look at what we're doing now. Building even more liquidity. Potentially we're inducing high now. We could come and take these highs and then things get interesting. But again, we're not going to predict anything. We're just going to sit and react. Okay. All right. So here's a question. How many of you would, I don't want to say how many of you, but like, think to yourself, if you saw these equal highs here, would you start forcing buys to take out these equal highs, even though you've got liquidity on the downside as well? It's just something to think about. Okay, so what is this? Likely a false reaction. Again, what is this? Likely a false reaction. So here you literally just have to sit on your hands. That's all. Okay, now we can be interested. Now, after we've faked it and faked it and faked it, induced the equal highs, now we can be interested. And realistically, you can, again, let's let it, okay, break of structure high. I know that a lot of you like to use it after the inducement, yeah? If you're waiting for that, you've got it. And the thing is, what point are you going to refine to? Likely, something like this. Personally, for me, this zone is too big, so I will take 50% of the zone. And then we need to think about targets, because yes, we are likely still playing only a pullback, because on the higher time frame overall, wait, where am I? Because this might give away. Okay, wait, let me go back and I'll go on to the 1 hour. There you go. Right now it won't show. Okay, perfect. So we know that we're still within this zone. 1, 2, 3 taps within this zone. Here's our likely next target, but we do know that we can get a pullback because we've had a build-up of liquidity, a reaction from it, and now we can get a pullback. Now, where is the best target? In this case, it's Asia high, because it's the most, it's like obvious liquidity. 1, 2, 3, 4, not even including all of these little taps here. So much liquidity rests there. If there was not a lot of liquidity resting there, then rather than targeting Asia high, it would probably make more sense to target a mitigation at the midline or a mitigation here, at least in my personal opinion. Okay, so again, this zone is too big for me. So what do? Just target just 50% of the zone, targeting Asia high. Perfect. Okay. All right. So at this point here, this one comes off. For me, this one comes off after we've induced high. So we'll take that one off. And when is our next timing? Why have I put it there? Oh no, that is, sorry, 12:30. Okay, so this was our next timing, but we know that we've got liquidity higher. We know that we've just given a false reaction from this liquidity here and then induced higher and then induced low. So we actually do expect this obvious, and the key word is obvious, liquidity to get grabbed. So let's put this at the next timing and let's go from there. Okay, so still we're just sitting on M5. Perfect. So now we have had liquidity being built, false reaction, inducement high with what? Vector candles. Yeah. We've also had obviously our little mini build up, but we don't really need to mark that in this situation because we understand, okay, we're in this overall larger build up. Yeah. Because again, I'm only focusing on the absolute Mona Lisa trades. That's it. Okay. So now, very nice. We start to pull away. Okay, we like this. at this point here, this is likely the inducement. You can refine from this right here, but you have to understand that your stop loss either has to go over above this, or you can refine like this for the RR, but you have to accept that you are going to take more losses. Personally, I take the zone like this. Limit would go on. Now think, it's always important to think, what would make this even nicer? What would make this even nicer? If we did what? If we built liquidity below the zone. Let's have a look. Okay, so we're into our timing now. Price is trading away, price is trading away. Now be honest with yourself. How many of you would look to trade, I don't know, this out of, you know, fear of missing the move, and then you take like an unnecessary loss? If you're going to take a zone like this, it has to be really, really confirmed. Like you have to have, you know, basically, in my opinion, the same thing. And then, you know, you can play that zone. Like that. That's the circumstance where you can play that zone. At least if you want to trade similarly to me. Okay, perfect. We're faking it, faking the reaction. And then we're coming in. New York trap is just around the corner, right there. Okay, now we need to think, okay, if we're in this trade, yeah, if we're in this trade, where are we going to target? Well, there is a safe option, and there is also a aggressive option. So let me just get right before New York trap so I can go on to H4. Okay, doing its thing. Okay, bit scary, shaky hands. Very shaky hands. Okay, so where did I want to get right before New York trap? So at this point, the trades break even. Oh, right, I've gone past New York trap. I'm an idiot. Right. Anyway, we know that overall, potentially, we could come take out this, at least for intraday. We could come take out this. But we also know that on an intraday basis, this, we built equal lows, we gave a reaction from it, we induced low, so potentially you could get a bit worried and think like, potentially you get a bit worried and think like, oh, you know, maybe it doesn't come down and take this. So, you know, you're looking at the difference of 10R versus the difference of 6R. And if you're not confident, then this would be your target. But if you look at it and you go, okay, I've built a quadruple top on intraday. I know that realistically I should still be coming lower. Combine that with the quadruple top, combine that with the way that we induced huge build up. Okay, I'm going to target this. Either way, I don't think it's that bad. Either one. Either one is pretty fine. Okay, so there we go. We're at break even. Oh, I've got auto on. I hate that one. Okay, we're at break even. Price doing its thing. Reacting. And again, if you're not at a point where you can control your emotions and this causes you to, oh no, I've got to get out. I've got to get out. I was wrong. This isn't a smart money trap. This is actually a mitigation and it's going to go higher. If you're at that point, that's completely fine to be at that point. It's probably better that you target here to prevent you from, oh no, and you end up pulling out all the way up here and 1 to 3. Like, that's not ideal. So look at what we've had here. Let's identify it. Very quick. Build up. Inducement high. What timing? On open. Potentially we could look for this. But again, is this the safest trade? Have we had a very proper build up, or have we said, okay, it's London close, I want to look for a mitigation. Oh yeah, that's my inducement. Oh yeah, that's my mitigation. Have we done that? Remember, we're better than a clock. You don't just want to be looking at things like that. You want to wait. You want to be patient. We're not looking to dive in. All we're looking to do is press buy and sell at good setups. So, again, okay, in this case, now I would say like, okay, this is nice liquidity. I'd like for this to get taken. If this gets taken, again, we're getting very late in the day, so I'd probably stop trading by now. But if this gets taken, then maybe we can get like a little bit interested, right? Okay, so price does, and now that it is late in the day, because we could just build liquidity here, in my opinion, this becomes the better TP. Because what could we expect from here? Well, we could expect a liquidity build up for the next day. Yeah. Okay. It does end up with getting taken. That's absolutely fine. So TP on that one. Let's drag this. It does end up getting taken. Perfect. Okay, we get a bit of a pullback. Potentially, if you really wanted to, if you wanted to be really, really aggressive, you could look at this. Where would be the most sensible TP? Well, we do expect it to just be a pullback. So normally it would be some kind of mitigation, but your mitigation is up here. And what does your mitigation lie on? Liquidity. So probably this is best for your target. But again, you do have to acknowledge that you are taking this straight off the inducement. So if you're taking this, you're taking it straight off the inducement. So it is a bit of a riskier one. But for me, this, if the timing was nicer, like if this was earlier in the day, this would definitely be something that I'd look to take, because I'm playing with the house's money basically. So I'd be more willing to take something like this. Okay. Again, price does its thing. So you probably go break even quite quickly as well, due to the nature of it. Okay, so keep going. Now look at that very quickly. What is this? Liquidity. What is this? Likely a false reaction. So you should not get scared by things like this. It should actually confirm like, okay, we're coming here. Yeah, you see, it's exactly the same stuff over the last few days. False reaction, induce low. So obviously this is false reaction from the high. We've got liquidity on either sides. Then we give another false reaction, boom, come up, take it out. False reaction to the downside. Damn, what happens? We take it out. Yeah, come and take it out, sorry. So this should not panic you. Now, I would not just pull a random zone like, oh yeah, this one, of course. I wouldn't just pull a zone like this. What I would do is, if this zone lined up with Asia midline or something like that, then yes. Then, yeah, what is my... There. Oh, why is it frozen? Why are you doing this to me? Oh. Okay, but why can't we go to M1? Okay, yeah. So if this zone lined up with Asia midline, then I would consider it. Then I'd be like, okay, yeah. And then with this false reaction, I'd be like, definitely. If this zone lined up with Asia midline, I'd probably set a limit on it. But due to timing, due to the fact that it doesn't, I don't want to just choose a random POI. But I'd still mark it. I'd still be interested to see if it does react from this point. Why are we doing this? Okay, I guess M5 is not the time frame that we can use. So let's keep going. And then again, also this is news. If you look, I'm pretty sure it was, this would have been 7:30. I think this was FOMC. Bang, right up. Mitigate realistically, because this is news, you probably get taken out on spread if you do set a limit. But like I said, not setting a limit on this because there's no reason for this POI other than the fact that we have a build up underneath it. So yeah, I don't like I like to have like reasons for taking my POIs. Like, oh, it's an inducement POI. Oh, it lines up with Asia midline. Oh, it lines up with Asia high or Asia low. Like, I like to have a reason. Okay, and then price does its thing and continues to melt. So let's go. Please let me go back to M5. Okay, nice. Okay, so looking at this, we have our liquidity here. Let's grab this. We have our liquidity here. So let's keep going. We want to get to the next day. Okay, perfect. So now we have liquidity much lower, a lot lower. Okay, now, okay, so I've just realized we're on FXCM, which is not the greatest thing in the world. So here, with all of this right here does not exist, but it still doesn't change anything because look, this is your liquidity, your equal lows, and this right here is your false reaction. But it may actually change where Asia midline is. Wait, give me a second. So in that case, Asia midline does. So potentially you could look at that again. I would be off the charts by like London close, so I wouldn't be interested. But in this case, it will change things because this is our Asia low right here. Sorry, I didn't realize I was on FXCM. I thought I was on Oanda, and this is our Asia high. And then obviously previous day low. Okay. What do we think we're going to do? Well, it is pretty simple. What we're going to do is we're going to wait. As always, we're going to let them show us what they want to do. Okay. So we've also got to know, okay, yeah, it's right there. All right. So here we had, again, this one is like quite tricky, but I would just look at this as equal lows. You maybe look at this as an inducement, but it's not like clean, which is what I want to trade. So huge wick means very big liquidity zone. So potentially, oh wait, let me get my thing. So we're also in Frankfurt. So our next one is London Open. Frankfurt induces high. We know that we've got liquidity lower as well. This is potentially a false reaction from that. We could continue higher as well. We do have to consider that. Okay, so let's keep going. Okay, we expect a false reaction here. No one's going to look to trade this. Boom, vectoring down. But is anything here clear like it was on these days? Not yet, right? We haven't really had a clear liquidity build-up and false reaction. We do know that we're currently giving a false reaction from this. We want to look at, we want to look at potentially this low being taken, but we don't want to force it. But we can see, like, okay, we go down here. Because this is a huge wick, everyone's going to be putting their stop losses there. This is our false reaction. Potentially, and this isn't the nicest, potentially we could look for sells from here. But why are these sells from here maybe a little bit more risky now? Because of this, right? They're a little bit more risky because we've now just grabbed liquidity. So if you want to take these sells, it's probably better if you get something like that. That's an ideal scenario to take the sells. But if price just comes back, maybe it induces one more time. Maybe this actually becomes the liquidity and we go like this and then take it out. Maybe we just keep going higher. Yeah. Maybe we say, okay, we've induced enough liquidity, Asia midline, we drop, lovely jubbly, all of that sort of stuff, right? It's possible. Okay. So let's also, and we'll do this for all the others now, mark the Asia midline, just put a line on it. Let's make it pink. Oh, I just deleted the timing. I meant to delete the 50%. Let's make it pink. There we go. Why not? Okay, so now potentially we could look for sells here, but the scenario would be we'd probably need a build up. False reaction, reaction from liquidity, boom. Maybe even another entry, something like that to consider it. No. And turn it back. Okay. Let's keep going. Interesting. Interesting. So now we've taken Asia low, but we still know, okay, there's liquidity here. So let's go on to M5 as we don't want to be stuck on M1. Okay, reaction, not really a huge false reaction. You look at the differences. Here we get a significant reaction away. This is just a candle or so. It's not even with big momentum, like tricking people in. Again, up here, we had just one bullish candle, bearish candle. Here we just get a little, maybe you can consider it. But again, liquidity lower. We could get a pullback now. Okay, so on M1, what are we likely doing right here? There's likely a nice little build. Okay, that's in pink now, black line. Okay, this is likely build of liquidity. Okay, let's see what we get. Okay, this is much nicer. A much nicer false reaction. A lovely false reaction. Okay, now this becomes a little bit interesting. Your liquidity, your inducement high. Maybe you'd wait for a break of structure of some kind, like that, and then you could look to get in on this. Okay, that would be fine in my opinion. I don't think that's the end of the world. It did look nice. We didn't get our break of structure though. So potentially this is just, again, going into another build up. But for me, if I was taking this, I would be quite comfortable with this loss. Target there, target there. Obviously, it is a bit more of a riskier one, but it would definitely be something that I'd be okay with. Okay, so now let's think about it. Let's think about what we actually have. We have this zone right here, which rests on the midline. So now we've had build up underneath it, like that. Yeah. And we're starting to go up. The only thing is, we do have, this would be my limit, but I'd understand that we can react from the M5 zone itself. Okay, let's check this out. That's not what it looks like. Let's check this out. Okay, interesting. So now we've had, again, build up, inducement, day open as well, midline on the M5 point. So now we could be like, okay, I understand this. Maybe you want to give this another attempt. Personally, for me, I would have my limit here. Obviously, this is a bit, oh yeah, that's the M5 point. It's always shit when you just get in a little bit too early, but that happens to everyone. Like there's going to be times where you get in early, and it's about what's worth the risk and what's not worth the risk. Okay, so again, false reaction away. Love it. Really, really love it. Okay. Again, could potentially be interested in this zone. So let's mark it up. But only if, okay, there, we're getting our vectors down. Boom. Getting our vectors down. Perfect. Are we in any significant timing yet? No. So let's continue to just let price do its thing. We don't want to force anything. Again, vectoring, vectoring, vectoring. Okay, now we're in New York open. And we've vectored down, we've built all the liquidity. So now we could get a good reversal. But again, we don't want to be predicting that this is the bottom of the higher time frame inducement. At least that's not how I like to do it. I like to actually see the confirmations of the inducement. I like it to like trade away, and then the next day I'll be like, okay, that's the higher time frame inducement, and I can trade away from it now. Okay, so let's jump down. Let's see. Okay. So we're getting a decent build up below this point. It's going to be an EDM. Be careful, it doesn't lie on Asia low. Asia low is here. So that's not a confluence for the zone, but it's an M1 and an M5 EDM. Now, if we were to take this, are we going to be taking this all the way back down to create a new low? Is that likely? Is a new low likely in this situation? No. We're just expecting a pullback. So what I'd recommend is that you target an imbalance fill. You can target the M5, you can target the M15. Either way, I think it's fine. personally for me, I'll target whichever is, I target the more conservative one. So, well, has the M15 already been filled? No. So for me, I'll target this one. But in all honesty, I think if you targeted this, you shouldn't be too worried. There's probably not a difference. Like, I don't, basically what I'm saying is I don't think it's wrong to target this. I just think it's more ambitious because you know that it's a pullback and it doesn't necessarily have to come back all the way to the extreme. Obviously, ideally it would. And if it does come back to the extreme, then realistically, we're going to be looking to play it. We're going to be looking to buy from the extreme. I'll probably take this actually. That zone's too small for me. I'll take that. Okay. So we've had our false reaction away. We've had our build up underneath our POI. It's looking good. Okay. We are tagged in. Perfect. And again, you can refine to this, but you do just have to accept that sometimes you are going to miss some trades. That is just how it's going to be. Actually, now that I'm looking at this is a Newswick. So I would actually probably target this. So that or the M15 zone. Either one is fine, especially because the M15 zone is right below that. I would probably target that, but I would actually have, depending on if we start building, then limit here for pullback at least to these highs. Okay, let price do its thing. Again, if you want to take the re-entry, if you really want to get in, you can take it like this. The only thing with this is you are trading an EDM. So technically, you're trading the mitigation of an EDM. So technically, your stop loss should be up here. And given the target, 1 to 3, yeah, that's not really worth even attempting the pullback. Okay, so price is coming down. Oh, did we skip? Okay, so there we go. That's out. But again, so normally I take this, the last sell before the buy up, but in this case, it's perfectly fine to refine to this because I want to be in the trade, and this is a bit too small. This is like 1.9 pips when I know that my target is going to be at least 30 pips, right? So I don't mind taking basically a 3 pip TP because it's still going to be roughly 1 to 10. So now we want to see some kind of build up. Okay, yeah, perfect. We're building up. So now I'd be interested in this. Target here. You see how I would not be interested in it if it wasn't for the build-up. Okay, now we've induced low, potential M5 let. Okay, there we go. We all saw it. Watch carefully. M5 let. Okay. Then we get our breaker structure. So if you look at it like this, we've had build up, inducement low, break of structure. We've technically mitigated the M15, but obviously we would much prefer to mitigate lower, like the M5 or even down to the M1. But you do have to consider this. So at this point here, like At this point here, if you still want to get into the trade, you have a lot of confluences for this zone. Again, we're not just pulling random mitigation zones. M5 let, inducement POI, within timing, break of structure afterwards. So you should, in my opinion, or can look for this zone. The only tricky thing is your target is like this. So again, I would probably look for 50% of that zone, like that. Again, now we need to think, when does this zone become invalid? And that is likely when we induce high. Okay? So, again, this zone is invalid. Why? Because now we've had a significant inducement low. So, this is going to become liquidity. We could still potentially look at the midline zone. But, again, let's keep going. Okay, so again, we've now induced high. We know that we're trading away from this, at least for the moment, right? At least for the moment, because it is a very significant inducement. This is most likely low of the day. We're not going to expect it to be taken. Of course not. So we could trade away from this, at least for the moment. Now, let's keep going. Interesting. Very interesting. So now we have built liquidity right below the midline POI. Again, if it was any other POI, I'm probably not interested. If it's any other POI, I'm probably not interested. But there's a couple of things that we do need to know. We are likely trading away from this inducement right here. And timing wise, we have London close right here. So if we get a mitigation of the inducement POI at London close with the clear build up below it, you know, trade away, perfect. Then we could be like, interesting. If you're not comfortable, then obviously you could look for, this is obviously quite a scary limit to put on. So what could we instead look for? Instead, we could look for EOS. Where are we going to take it? Probably this for me. There we go. BOS lower. Perfect. Wait for the more confirmed trade. Okay. London close. Perfect. Keep going. Keep going, vector up. Okay, so this has probably gone without us. Yeah, no, looking at this is definitely gone without us. We've come and filled the M5, that's fine. Where would we be targeting? Either like an imbalance fill. I think realistically, just the new low. Because it's London close, end of the day. We expect that end of day consolidation. So I think a new low is the most appropriate. Let's see what we get. Okay, building. Lovely. And that is what we get. A new low. It's the end of the day. Okay, so yeah, so I do think this is a valid loss. And I do think if you had your TP here, would not be the end of the world. Well, obviously it would end up break even, but from a technical standpoint, it wouldn't be the end of the world. The only thing is you do have to react a little bit, and especially when you're building liquidity, inducement, M5 let, for the sake of, so that's 1 to 8, for the sake of 2R, I think makes more sense, especially when this lines up with your M15 mitigation as well. Like, just be sensible about it. Again, don't let greed get to you. Mistrade, totally fine. Mistrade, totally fine. No real way to enter this one. Even if you were like super aggressive, it's not the nicest inducement entry. Doesn't really give you a clean point that you should be like, oh, okay, of course, like, I execute here. So yeah, this is just like, unfortunately, you just missed this by this sell, unless you have a limit here, is also missed. But again, with our POIs, the ones that line up with Asia low, Asia high, Asia midline, inducement POIs, like these are the POIs that if you're wanting to take Mona Lisa trades, you should really, really be focusing on. Okay, let's go again to the beginning of the next day. I think this is the last day we will go over. Is that right? Perfect. Okay, so again, what do we know about FXCM? These wicks don't exist. You can just go check this day on like something like Oanda, and I guarantee you that like something like this will be Asia low. Again, it's a bit annoying, but it's just kind of how it is. So that's Asia low. It's Asia high. Now that we've traded away from this inducement, I don't think it would be wrong to expect like, okay, this is the inducement that we're trading away from. This is, you know, now I can be interested in, you know, if I take a trade, what would it be fair to expect? Potentially we could just have retail heaven, or potentially we could have London knockout, or we could even have London knockout, induce high, lit starter kit. But I think retail heaven and London knockout are like, it's reasonable to expect those more than the lit starter kit. So again, same thing. We'll do our timing. We'll sit on our hands and we'll look. Okay. Okay. So what are we doing here? Liquidity, false reaction. All of this liquidity, false reaction. So exactly the same as not this day, but this day here and this day here. We have liquidity on either side. So what should we do? Sit and wait. Let's move this over to London Open. Okay, very, very interesting now. So now, where we've got all this liquidity here, we've got London Open coming up. What do you think we could expect? We've had our false reaction. What do you think we could expect? Are we going to get it to the minute? Not quite. Almost. Okay. Right there. Boom. So that is potentially our London Open inducement. Again, this right here, if you really, really want to get in and you're like desperate to get in, it's risky, but you can take this. Again, it's quite, I don't think risky is the right word. I think aggressive is the right word. You can take that. Okay, now, just from an understanding point of view, we have had inducement low away from our potential, like, major inducement that we want to trade away from. So, in terms of targets, what would make the most sense here? Are we just going to target the current day high? Or, because everything's aligning, Does it make more sense to target maybe yesterday's high? Or maybe even higher, like up here? Well, for me personally, if I was to take this trade right here, now this is not induced in the nicest way at all. Like if you look at it, the way that this is induced is not nice. We would have much preferred these vector candles to just keep coming. But everything else about it is nice. The false reaction up, inducing Asia high breakout traders, where are their stop losses, Asia low. Everything else about it is nice. Either Asia low, this structural point, these equal lows, everything else about it is nice. But again, the fact that we haven't induced with vectors is not the nicest. Now, what do we understand about this point right here? What do we understand? We understand that it's very likely a smart money trap. So from here, okay, interesting, smart money trap, giving the reaction, even gives the break of structure, very interesting. Okay, now we have like potential, so inducement, potential let, again, becomes a little bit scary to take, especially if you're taking the zone with no imbalance, but valid nevertheless. Again, come all the way back down. Again, if you want to get in a third time, there you go. These are your re-entries. Personally, I'm not going to be taking these. I'm more than comfortable with just this. Like I said, I will be in this, hold it to here, have an alert here, and I'll just be looking at other pairs, trying to find clean setups on other pairs. Okay, but look at how lovely this reaction from the SMT is. Look at how much they fake it. How many opportunities they give to get in. They even react from here as well. And SMT, smart money traders, they're not at break even. They're probably not at break even. Not until it breaks structure again. Possibly this low. That's their break even point. So potentially that's 2 losses for them right there. It's important that you understand these concepts so that you do not get tricked by them. If you can understand where the traps are, you're going to have such a nice time. Same with if you can understand where your false reactions are, okay, yeah, sure, you could see this as this. And then you come down and you're wanting to take this mitigation, but you've got liquidity higher. So this is likely a false reaction. It's not the best, especially when we've already induced low. Look, this POI holds, but we hadn't induced high yet. We just came up, came back down, mitigated it. And then when we induced high, it gets smoked. You don't take a re-entry from this. But here, we'd induced high, we came down, we'd induced these equal lows as well. And look, now we're really digging into it. Liquidity, false reaction, strong momentum away, induce low, trade away. Yeah, you see how this is literally this is one of the most important things that I'm really trying to drill into you, because it's important. It's really, really important. And we got the exact same thing here, where this was our liquidity, this was our false reaction. And then obviously we're getting really into it because liquidity, false reaction, inducement, trade away from that. But then this is the inducement here. the inducement of this liquidity plus false reaction away from this overall inducement as well. So it's very unlikely that this one's going to play. And then look, we keep going. You know, maybe we get a little bit teased out. Potentially, if you're starved for a trade, you can look to take this EDM. This is not something that I'd take. I'm more than comfortable just holding this one and then looking for other opportunities. Okay, so now, when is our next timing? Our next timing is, of course, 12:30. So let us have a look. Again, what are we waiting for? What are we waiting for? So we've now induced this. Again, we should all understand why this POI was no longer valid. Significant inducement to the downside. Didn't really have a build up underneath it or an immediate one. And plus this inducement low outweighed this minor inducement high by a lot. Okay, so price is trading away. We're getting another potential EDM, but at this point I'd still just be looking to sort of sit on my hands, because what I'd want to see is, there we go. This is what I want to see. Why is it looking like that? This is what I want to see. Liquidity, false reactions, giving people the illusion it holds. Lovely, like look at that. Oh yeah, we induced, oh yeah, break of structure low, come into the mitigation. Everybody takes sells. Sells are the way to go. After the break of structure. Oh yeah, oh. And then look, oh, we take out the zone. Wow, what a surprise. At what timing? MM2 on the dot. Interesting. What a shock. Let's wait, because we don't want to, the last thing we want to be doing is, oh yeah, this is the inducement. No, this is the inducement. It's best to just wait, be patient. And then you could be like, okay, this looks good. This could definitely potentially be the inducement. So I will let it trade away. I think looking for this would be fine, because we've had our build up, our inducement, potential mitigation. So we'd be interested in this. When's our next timing? New York Open. There we go. Okay, price is doing its thing. Okay, interesting, interesting. But now it does get a little bit more interesting. What is the main point of New York Open? What is the relationship between New York Open and New York Trap? Ideally, in a super ideal scenario, New York Open provides the false move for New York Trap to reverse against it. So let's have a look. Currently New York Open. Okay. I think, if I'm being honest with you guys, I think this limit would be worth it, but I do actually expect it to get taken out, because New York Trap, in an ideal world, New York Trap actually traps something, so it induces something. And this inducement here, yes, it happened at MM2. We've given the pullback from it, and New York Open is now providing the bullish move. New York Open is now providing a bullish move. So potentially New York trap will induce high and then reverse against it. But in all honesty, this trade here I think is fine. And it is probably a trade that is it a trade that I would take? Yeah, I think I would. I think I would. So I don't think that this trade is like the worst trade in the world. I think this inducement. Right. So let's go over a couple of things that could be nicer about this trade. If we did this, so this is lovely, but then if this reaction was basically more violent, like tricking more people into like selling prematurely and then doing this, that would have been lovely. It's always good to consider like what would have been nicer about your trade, but to be honest, this is quite nice. We've got a clear build up underneath the POI. We've induced the previous day high. We've taken lovely buys up to this point. This is worth it. Okay. Like here, you could. It depends. It depends how risky you want to be. You could go break even at this point, especially since you have a wick entry. But you would. It depends whether you're comfortable. Like, oh, you know, maybe it comes back and comes into this and drops again. But if you're not comfortable with that, I don't think it's the end of the world to go break even here. I think this would make sense, especially because realistically your target is just here. It's just like this, like immediate liquidity. At least for me, it would be. Definitely no re-entries here. Like this would not be a re-entry because this inducement is technically not like the nicest inducement. If you look at it, all it's really gone and done is just taken out a higher high. Ideally, we would have liquidity, better false reaction, inducement. So depends on whether you value not losing versus the potential of gaining 6R. Okay. Okay, so we popped back in. Okay. Yeah. Okay. That gets taken out. So probably a valid loss. Again, for me, it's probably a break even. I'm quite aggressive with the way that I break even, but valid nevertheless. Now what do we have? Interesting. Interesting. Okay. And here we got much nicer false reactions. But the way that it induced was not the nicest. We would have much preferred, again, similar to this inducement here, we would have much preferred that the vector candles continued inducing and induced high. That would have been the ideal scenario. Entry-wise, if we get a build-up, no, I don't think I would actually. I did not think I would. But I would actually be interested in this right here. Looking at this, this is all liquidity right here. So potentially you could even target like an Asia high bounce. Okay, that's gone. That's just completely gone. Price came down, gave its reaction, London close, nice little pullback from the midline, That's our midline POI right there. Pulls back from it. But again, nothing crazy. Yeah, this would kind of be, right, after this drop, I'd probably come off charts. I think this trade is okay. I don't think it's great. I think it's okay. I think if you took this as well, depending on how you refine your zone, maybe you refine your zone. Maybe you want to get in versus wanting better RR. But either way, I don't know. It depends. Because this trade is quite risky for me, I would have wanted, like, ideal scenario, I wouldn't want it to come back into the zone. Just drop. I think you have to sort of realize that if it comes back into the zone multiple times on this, which is not the nicest inducement because we haven't had the false reaction here, we've just sort of built some liquidity, not really given a nice false reaction, and then just made a new high. It's not the nicest. Whereas like here, we gave like multiple false reactions from this zone, quite aggressively downwards as well. And so people are thinking like, oh yeah, this is it, this is it. You know, if you look on like M5, these are going to be like wicks up to it. So people are trying to get in after we've had like your M1 BOS as well. It's just not the nicest, and stuff like this majority of the time will get taken. I think when it starts to build below it though, this validates it, at least for an attempt. It doesn't make it less risky, it just kind of validates it, and I would not have taken this without this build up below. I would just expect a new high. But I think, yeah, I think that's definitely, this comes down to whether it's a loss versus break even, just comes down to whether you value the RR or like the potential gain versus preventing a potential loss. And I think that's all that really comes down to.